everybody, this is Christina Amaral with Coldwell Banker Realty, and I'm here with Krista Valpreda from Guaranteed Rate Affinity. And today we're going to talk a little bit about the loan process. Krista, before we get started, would you mind telling us a little bit about yourself and how long you've been doing this?
Absolutely, I'd be happy to. So I started my real estate career in 1992. I have presently been focusing on purchase loans, although I do also facilitate refinance transactions. And yeah, I have a very vast knowledge base on all different types of lending.
Okay, perfect. Thank you. So the first question that I wanted to ask you is, what is the difference between the different types of pre-approval?
Absolutely, happy to answer that. So generally there's three different types of loans, loan approvals rather. The first is a pre-qualification. So if a buyer were to come to try to figure out how much they qualify for, they would give me verbal information. My credit score is approximately this, my income, my assets, they would give me all the information. There isn't a formal application that's submitted. A pre-qualification is really just to provide somebody the details as far as what they can qualify for based on their estimated information. The next step is a pre-approval. So a pre-approval letter is typically what your real estate partner is going to want you to obtain. A pre-approval letter is a assumption of a customer that has submitted a loan application, they have had their credit report run, and some of their information that they have given us has been verified. So income documentation is typically provided at that point, and a formal letter is written. That formal pre-approval letter will detail out that a customer has had their credit report run, they've had some type of review done with their application, and this is what they qualify for. So the pre-approval letter is the minimal step that you're going to want to take before going out to look for a property. So the pre-qual is really just for your own use, for us to be able to determine what's a good price point for you to start looking. And the pre-approval letter is what you're going to need at minimum to be able to write an offer on a property. And in this market, oftentimes to even go out and look at a property, they're going to require that you're pre-approved. The third step is to have your loan fully underwritten by an underwriter. So not only would we complete step one with the pre-qual, we'd complete step two with the pre-approval, and then we would collect all of your supporting documentation. So this would be tax returns, W-2s, paycheck stubs, bank statements, and any other relevant documents. Once that full credit approval is issued, that's really where your pre-approval letter is going to shine versus anybody else who's submitted an offer on a property. It will say that your loan has been fully underwritten and reviewed by a underwriter. And also you can present an offer with confidence without any loan contingencies. So there's a lot of information and time that goes into the third step, that fully underwritten loan. But it's going to put your best foot forward when you're presenting an offer.
Perfect, thank you.
Sure.
And kind of along those lines, what are things that people should look out for when they're applying for a home loan?
Well, I think the big thing you really want to make sure of is that you're working with somebody who knows your direct real estate market. That's where it becomes important to have your real estate agent and your mortgage person team up together, right? So we can be working cohesively as a team for you in the loan process as well as searching for a property. But the real thing that you're going to be looking for is someone who understands what your needs are from a loan perspective. There are many different types of loans that are available. They're as unique as the buyers are different. So for example, if you're a first-time home buyer and you don't have a whole lot of money to put down on your first home, that's going to be a different loan than if you're an established buyer and you have a significant amount of down payment to put down. They're different types of loan transactions. So you really want to make sure that the mortgage professional you're working with knows exactly what your needs are and is able to facilitate giving you what you're asking for.
Awesome. And how would somebody go about budgeting for a home loan?
That's a great question. So the biggest hurdle that we come across is just because you can qualify for a certain purchase price doesn't mean that payment is something that's within your budget or your comfort level. So when you have an initial meeting with me or with your mortgage person, you'll go through all the details of your income and your assets and where that will put you from a qualification standpoint. So typically what we would do is we would provide you with a pre-approval letter that would be based on the highest amount that you qualify for. Then if you go and look for properties, you can make sure that that fits within your budget.
Okay. I asked my Instagram followers if they had any questions, and one of the questions that came up was how can they avoid paying mortgage insurance on a down payment that's less than 20%?
Great question. So first off, I want to explain what mortgage insurance really is, because I think there's this understanding that mortgage insurance is really bad and you want to avoid it. The reality is there really isn't a way to avoid it. You're going to be paying for mortgage insurance with less than 20% down. But I will say mortgage insurance is a additional insurance policy for high risk loans. So this would be a circumstance where a customer is putting less than 20% down. By just the mere fact says nothing about you as a buyer. It just says that that is a riskier loan because you don't have 20% down. Now you can avoid mortgage insurance in just about every instance. So mortgage insurance, and I know that conflicts what I just said, but mortgage insurance can be paid in a number of different ways. It can be built into the interest rate. It can be something that you pay for monthly. You can pay for the mortgage insurance in a lump sum all at one time, so you avoid the monthly mortgage payments. Mortgage insurance is not tax deductible. So oftentimes what a customer will look at is what's the bottom line payment. Okay, so if you have a mortgage insurance, a very hefty mortgage insurance payment, none of that is going to be tax deductible. So it might actually make sense for you to take a higher interest rate that has that mortgage insurance built into it and take the full tax write-off on the interest. So mortgage insurance is unavoidable for certain circumstances, and that's really where it becomes important to have those discussions with your loan officer so they can give you some education about whether or not it's required, what options you have for a higher interest rate that includes that mortgage insurance, or whether or not it just makes sense to pay the mortgage insurance monthly or upfront. So is there a way to avoid it? Technically, yes, because you can have that higher interest rate, but really all it means is that it's built into the rate.
Okay, that sounds great. I have a few clients who are self-employed and they've wondered about the loan process, how it differs from somebody who has a traditional employer-employee relationship. Could you explain the process when it comes to getting a loan for somebody who's self-employed?
Absolutely. So a self-employed person really isn't that much different from a salaried or a W-2 employee. The difference is how we calculate income. So if you've been self-employed for a long time and you have tax returns, at least for the last 2 years, calculating income is very simple. You're really looking at your net numbers. So if let's say you had income of $500,000 and you have a bunch of write-offs, right? Because a lot of self-employed people have a lot of write-offs. You have to be careful when you're doing your taxes because the lender and the person qualifying you, the underwriter qualifying you, is going to be looking at the net number. So the net would be after all your write-offs. So with a self-employed customer, there really isn't different loans for self-employed versus a salaried customer. It's just the way that you analyze the income. So once again, that's where it becomes really important to make sure that you're working with a qualified person who knows how to analyze self-employed income.
Awesome, thank you.
You're welcome.
Is there anything else that people should know about, the loan process or obtaining a loan?
Well, I will say this. I have found in this crazy real estate market that we're in right now, the most important thing before you even start looking for a house is to get pre-approved. Interest rates are increasing every day. Sometimes interest rates are at a lower level, and that's where your pre-approval was completed. You want to make sure you're revisiting your pre-approval as the market moves. And your loan officer will be able to communicate that information for you. So getting pre-qualified first is the first step that you should complete before you even really start looking for properties. You may find your dream home, and then once you sit down to do your pre-approval with me, you'll realize that you can't qualify for it, or maybe the payments for that property are just outside of what your budget or comfort level is. So getting the pre-approval done first is really what I recommend. I think it puts your best foot forward straightforward. It enables you to write the strongest offer that you can possibly write to compete in this market. So that's what I would say is the first step and the most important piece of your initial house hunting and qualification searches.
I 100% agree with that. Last question, how can people get a hold of you?
Oh, fantastic, great. Well, you can reach out to me in a number of ways. The best way that I like to communicate with people is through my cell phone. You can reach me at 408-810-2512. I'm a great texter. If you text me if I'm awake, you'll get a response from me. You can call me there as well. You can also email me if that's your preferred method of communication. My email is kristav@grarate.com. So once again, that's kristav@grarate.com.
Awesome, thank you. And that's going to be in the caption below for you guys as well, if you want to go ahead and reach out to Krista. Thank you so much for your time and for answering these questions. I really appreciated this. And if you guys have any other questions, feel free to reach out to me or Krista. All right, thanks.
Thank you.